So this is Bitcoin Cash. This is probably the most prominent or well-known fork that has ever happened. So this took place back in 2017, and it was a philosophical issue. So the Bitcoin blockchain has a block size of 1 megabyte. And that means when you think about a block, that's a collection of transactions in a ledger. So you think about your QuickBooks. You go in there and you have all your journal entries. However many of those make up 1 megabyte, that would get built into a block. And then the next block would get built on top of that. The problem is that there's only a block about every 10 minutes. So if you have more transactions than will fit in a block, the amount of fees that a person who wants to conduct a transaction will have to pay will increase because you're paying for priority to be included in the block. So the answer that the Bitcoin Cash group came up with was we'll increase the block size to 8 megabytes. So that works as far as getting more transactions per block, but it also makes the whole blockchain larger, making it harder to secure. So that's as far as we're going to go into the philosophical nature of this, but that was sort of what the debate was about. So on August 1st of 2017, Bitcoin Cash forked the chain and the miners of Bitcoin Cash started mining that. Now, on the first day, there were very few exchanges that even supported Bitcoin Cash. And the price on those exchanges fluctuated between $1 and $400,000, depending on where the exchange was and the time of day. There was major liquidity issues, meaning that if I wanted to sell Bitcoin Cash that I had access to, there wasn't really anyone to buy it. And on top of that, there wasn't a lot of mining being done. So there was no blocks at all mined between 9:16 in the morning and 2:12 in the afternoon, which means during those 5 hours or so, no transactions at all were processed. So then there becomes a question of what is the real fair market value of this if I can't actually sell it? Is it more than zero? That's a question that we don't have an answer to from any sort of substantial authority. By the end of the day, the price settled around $240 per coin, which is generally the price that people who reported this income on their tax returns use, something in that 240 range. Now, we didn't talk a ton about this, but there's a big difference of having your cryptocurrency on an exchange versus having it in a private wallet. If I have it in a private wallet, when a fork takes place, I can access that immediately or as soon as there's software available to access it. If my cryptocurrency is on an exchange, for example, we're going to use Coinbase in this example. If I had 1 Bitcoin on Coinbase, Coinbase got the Bitcoin Cash at the time of the fork. They have to decide when/if they're going to allow their users to have access to the fork coin. And like I said, coins fork all the time, and most of them are not legitimate. And some can be malicious. So a major exchange needs to be very, very careful before they give access to a fork coin to their clientele because it creates a big security risk. So Coinbase waited until December 20th of that same year. At that time, on Coinbase, Bitcoin Cash was trading for $4,356 per coin. Right after that, well, not right after that because it's still pending today, Coinbase was sued for allegedly a pump and dump scheme, which meant that Coinbase insiders overinflated the price of Bitcoin Cash before it went live in order to sell their own Bitcoin Cash at a higher price, knowing that it would crash back down later on. So based on the price on the exchange, a person with a Bitcoin on Coinbase or Bitcoin Cash on Coinbase would have to recognize $4,300.56 of income. However, it's unlikely that that was the true fair market value at the time, and it's unlikely that we'll ever know what the true fair market value was.